You may think millionaires are helping you by sharing their investing advice, but the secret playbook of millionaires is not what you think. While you stay busy chasing trends, the ultra-rich play a completely different game, one they rarely talk about. But in this video, we are cracking that code. We will expose the hidden investing strategies that millionaires don't want you to know. No misconceptions, just real, unfiltered tactics that quietly build fortunes. So if you want to stop playing the small game and think like the ultra-rich, stick around till the end. The power of starting early. There's one thing about millionaires. They don't wait for the perfect time to invest. Millionaires understand that time itself is the greatest asset because the earlier you start, the longer you let compound interest work its magic. Now, I know it's not all fun and games because not everyone has the funds available to invest right away. But if you do, don't waste your time because time is money. You can think of it like planting a tree. The sooner you put the seed in the ground, the bigger and stronger it grows. Many millionaires started with modest amounts, but stayed patient, which is exactly what allowed their investments to snowball over decades. Even small contributions over time can build substantial wealth. Let's understand it like this. If you invest just $200 per month from age 20, assuming a 7% annual return, you could end up with over $500,000 by the time you retire. But if you start at 40, you would have less than $100,000. That's the power of compounding. So start right away. Value investing. Now, we know that millionaires don't just throw money at any stock. They meticulously research and invest only in companies that are undervalued but have strong potential. I'm sure you know about Warren Buffett. Well, Buffett's value investing approach is pretty simple. He tends to find solid companies with strong fundamentals and buys them when they are priced below their real worth. Then all he has to do is hold on to them for the long run. And that's it. Instead of getting caught up in the market hype, millionaire investors focus on businesses that have consistent growth and profitability. You also have to make sure to research before investing because understanding the market is very important. As Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. So millionaires know that market downturns are not disasters. They are golden opportunities. And to understand this, you have to be strong with your research. When panic sets and stocks plummet, the wealthy see a discount sale. They buy up undervalued assets while the average investor is selling in fear. Over time, as the market recovers, their investments grow exponentially. This strategy, which you might know as counter-cyclical investing, is exactly how the rich multiply their wealth while others panic. Growth investing. You know about Peter Lynch, right? The legendary investor? Well, he believes in growth investing. Now, if you're wondering how that works, you have to spot companies with high potential and ride the wave of their success. Many millionaires often invest in startups or emerging markets with explosive growth potential. While this strategy does carry more risk, the returns can literally be life-changing. Just think of those who invested in Amazon and Tesla early on. Their investments have multiplied beyond belief. You can identify growth stocks by looking at their revenue growth rates, industry trends, competitive advantages, and how innovative the leaders are. But investing in growth stocks requires a lot of patience because they often face volatility before skyrocketing. So make sure to be prepared for that. The power of diversification. One of the biggest mistakes you can make as an investor is putting all your money into one type of investment. Millionaires understand the power of diversification. They spread their wealth across multiple asset classes to minimize risk and maximize returns. And here's how you can do it too. So first, you know about stocks. They provide a high potential for growth but come with volatility. Bonds, on the other hand, offer stability and consistent returns while acting as a safety net. Real estate also generates passive income and appreciates over time. We all know about commodities, gold, silver, and oil. They serve as hedges against inflation. As a new investor, you should probably look into cryptocurrencies too. Although they are high risk, they are also high reward investments in digital assets like Bitcoin and Ethereum. Now, if you're wondering how to diversify your portfolio, you can use the 60-40 strategy, where 60% of your portfolio is invested in stocks and 40% in bonds. It provides a pretty good balance between growth and risk reduction. Or you can go for a geographical diversification like Millionaires, who don't just invest in their home country. They spread their investments globally. They do this because usually, emerging markets can provide higher growth potential than developed markets. Index funds. If there's one thing that all millionaires love, it's index funds, because they literally eliminate the need to pick individual stocks while still providing solid long-term returns. And honestly, index funds are ideal for any investor. While actively managed funds charge high fees which eat into profits, index funds have lower expense ratios, meaning more money stays in your pocket. Investing in an index fund, like the S&P 500, can spread your risk factor across 500 top companies, and the stock market has historically delivered an average annual return of around 10%. That makes index funds a reliable wealth-building strategy. If you're looking into investing in the S&P 500 ETF, then the Vanguard S&P 500 ETF or the iShares Core S&P 500 ETF can be a good option for you. And if you're looking for the International Index Fund, then the Vanguard FTSE All-World ex-US ETF can be a good option for you. If you really want a set-it-and-forget-it approach to investing, index funds are the way to go. They allow you to grow wealth without the stress of picking individual stocks. And as an investor, what can be better than that? Automated investing. In today's era, millionaires don't just manually trade stocks every day. They automate their investing to remove emotions and ensure consistency. Automation can help you build wealth really easily. You can invest a fixed amount at regular intervals, like $500 per month, and that will reduce the impact of market volatility. When the market is down, you can buy more shares. And when it's up, you can average out your cost over time and buy fewer. Platforms like Betterment, Wealthfront, and M1 Finance can easily manage your portfolio based on your goals and adjust your investments based on risk tolerance and market conditions. Many millionaires maximize their 401k and IRA contributions because these accounts offer tax advantages and compound wealth faster. The safety net. Now, do you think millionaires have all of their money tied up in stocks and real estate? Well, if that's what you think, you have to think again. While they are always on the lookout for high-return investments, they also make sure to keep a solid cash reserve. And that's a major difference between them and you as an average investor. Why, you may ask? It's because when unexpected expenses hit, whether it's a medical emergency, a job loss, or a market downturn, the rich don't scramble to sell assets at a loss. Instead, they tap into their emergency fund and ride out the storm stress-free. But that's not it. Having cash on hand is not just about survival. It's about opportunity. When markets dip and everyone else is panicking, millionaires are ready to buy undervalued assets at bargain prices. They're not just sitting on cash for no reason. They're waiting for the perfect moment to strike. And of course, there's the psychological comfort of knowing they have a financial cushion. Money in the bank means no sleepless nights over market fluctuations or sudden expenses. Wouldn't you want that too? Now, how much cash do the wealthy actually keep? Financial experts recommend 3 to 6 months' worth of living expenses. But the ultra-rich live differently. They sometimes hold up to 2 years' worth in liquid or low-risk assets like money, market funds, or short-term bonds. They don't just dump their money into a regular checking account either. Instead, they park it in high-yielding savings accounts, some offering up to 5% APY, money market accounts, or even treasury bonds, all of which provide safe returns while keeping funds accessible. So, make sure to always keep a portion of your wealth liquid. You don't want to be the person forced to sell off investments at rock-bottom prices just to cover an emergency. So, now you know the secret strategies that many millionaires keep to themselves. Now the question is, will you take advantage of them or keep following the same old ways? Let us know in the comments below, and if you found this video helpful, make sure to subscribe to our channel so that you stay in the loop and never miss out on any of our videos. Subscribe now. See you in the next video.